GRRR has cooled off from the intraday high of $21. It printed in the regular session of today, the 14th of August, 2025. Let's see now, it's up 1.3% or thereabout. Let's see what we have. So this is the 4-hour chart. Got a rejection there as well. We have here it says 18, but we have 21 on I think or swim. In terms of projections, it has up to 20.04, 19.49, 18.64. Indeed, there might be even higher projections. Let's see what we have. 20.58, nothing there. We have 24.51, 26.42, 27.61. Yeah, and indeed a host of downward projections. We have here 12.41, 13.33, 14.82. Yeah, and a host of downward projections. Though prices are expected to remain in place up till Wednesday the 20th. It maybe consolidate thereafter, but yeah, from now on, it's expected to be a distributive contraction. Let's see what the selling pressure, if any, is. Yeah, okay. Well, it's not a selling pressure. It's everything is strong. Everything is strong. Nothing weak here. The 10 and 21 period moving averages are in robust trend modes. As things stand right now, it has given up the gains it ran up in the pre-market session, in the post-market session of yesterday. So the stock has been showing a lot of strength, if you like, a decent amount of strength since Thursday the 7th. On its daily chart, okay, the reverse is the case. Higher prices are expected to remain in place up till Wednesday the 20th. Well, within this, you can still fit in what is being extrapolated on the daily chart within this daily chart. This may be possible. Um, let's see now. However, we don't have anything to the upside prevailing right now on the daily chart. Everything is a downward projection, beginning from the least 9.9, 12.05, 15.55. And indeed, we've seen yeah, okay, here we even have higher projections as well, 20, even higher than we saw on the date on the 4-hour chart. 28.51, 32.24, 34.54. Yeah. And let's see. Yeah. Okay. After the okay, well, we'll leave it that way since the extrapolation may not actually pan out. So we'll just leave it at strength and remaining in place up till Wednesday the 20th. Okay, in terms of price pressure momentum, it hasn't fed through here. We have a negative, severely bearish 21-day moving average. The 10-day moving average is trending, but it has negative derivatives indicating that yeah, you can clearly see the stock is not out of the woods yet. On the 4-hour chart, it looks like it looks a lot. It gives a different picture. That's because the 4-hour chart gives you a magnification of what is going on here. I would just say over the, if you like, it just gives you, yeah, maybe what is just has just magnified what has happened since the 7th of August, if you like, maybe, yeah, since the last couple of weeks or couple of days. So things may look a lot more different, a lot more magnified on the 4-hour chart. So things are a lot more robust in terms of price pressure momentums on the 4-hour chart, but it's not hasn't fed through here. Stock is still not out of the woods yet. So let's see now. The stock is drawing heightened attention in the trading community following the release of its H1 2025 earnings. The report has intensified the ongoing bulls versus bears debate over the company's trajectory, particularly in light of its AI-driven solutions and expanding global footprint. Bulls sentiment is fueled by the company's demonstrated revenue momentum, 39.3 million dollars in the first half of this year, which the management of the company attributes to strong execution in global contracts and a clear edge in AI-powered security and intelligence. Supporters argue that the company's presence across security intelligence, network intelligence, business intelligence, and IoT places it in a high growth sector, and its ability to scale solutions across regions signals competitive strength. The recent $105 million equity raise and a large payment from its biggest customer in Egypt have also reassured bulls about liquidity, enabling the company to chase larger contracts and accelerate expansion without immediate funding pressure. So bears, however, remain unconvinced, citing history of ambitious guidance and capital raises that have sometimes preceded share dilution. The latest $105 million equity raise, which bolstered their cash position, has triggered concerns about potential shareholder value erosion, particularly if growth targets aren't met at the pace promised. Skeptics also note that despite the positive adjusted figures, the company remains loss making under IFRS and is exposed to macro risks such as currency devaluation in key markets. The immediate takeaway is clear. Traders are bracing for heightened volatility as the stock digests these results. Um, Bulls see a company with improving liquidity, declining debt, and scalable AI technology poised for breakout growth. Bears see the potential for dilution and overpromising, with gorillas positioning in high demand AI driven intelligence solutions. The next few quarters could prove decisive in determining whether the company's adjusted profitability can consistently translate into IFRS level earnings. Okay, so that's what we're looking at here. It's now gone into a negative. Yeah. So just have a look and see what you make of GRRR, and I'll continue to update you. Thank you very much for watching this video.